Jerome Powell's hawkish narrative and collapse of two U.S. financial stocks. Jerome Powell's hawkish narrative. Federal Reserve Chair Jerome Powell struck a hawkish tone in congressional testimony. Powell told the Senate Banking Committee that there is more work to do as inflation is running higher than the Fed expected at its last meeting. Markets now expect interest rates to approach 6% by the summer, compared to under 5% now. Collapse of two U.S. financial stocks, Silicon Valley Bank and Silvergate Capital. Silicon Valley Bank Startups Bank. On Friday, 10th March, the Federal Deposit Insurance Corporation (FDIC) announced the shutdown of the US-based Silicon Valley Bank (SVB) and the seizure of its assets. A letter that Silicon Valley Bank Chief Executive Officer Greg Becker sent to shareholders Wednesday. The bank had suffered a $1.8 billion loss on the sale of U.S. treasuries and mortgage-backed securities and outlined a plan to raise $2.25 billion of capital to shore up its finances. Customers immediately tried to pull their money, including many of the venture capital firms the bank had cultivated over decades. The withdrawals initiated by depositors and investors amounted to $42 billion on Thursday alone, according to the regulator. The bank was then closed by the California DFPI and placed into FDIC receivership, marking the biggest failure of a U.S. bank since the financial crisis. Silvergate Capital crypto-friendly bank. Silvergate's shares have fallen 97% from its all-time high in November 2021. Concerns have been raised around the financial health of the tech-focused bank, which services the likes of crypto-friendly VCs such as Sequoia and A16Z, according to Cointelegraph. In its latest financial update, Silvergate disclosed it sold $21 billion worth of its securities holdings for a $1.8 billion loss to shore up its balance sheet aimed at raising additional capital. It also raised $500 million from venture firm General Atlantic and is seeking to raise another $1.75 billion in sales of its shares, for a total of $2.25 billion.